Hey, welcome to the closing beat, everybody. Happy Tuesday to you. How you doing out there? You ready for February yet? You guys see the market fall? Oh my gosh, what are we doing here? Hey, we're financial advisors here with Jazz Wealth. While other advisors are playing checkers, we are playing chess. We are the financial advisors for people who don't think that they can have one. Anybody and everybody, always welcome there. We love working with people, especially those of you that haven't quite made it. You know what I mean? Like all the people that are rich get the advisors. I'm like, what's up with that? You know what? Let's get people there first. So anyways, that's that. We have our Wine and Wealth class coming up this week. Last week we did a lot of great classes so far this year. We did February financial issues, 529s, new tax laws. We've been through all kinds of different stuff. So hopefully you'll check that out. If you're one of our clients, welcome to everybody else. Let's get right into it here. We don't want to mess this one up here today. Inflation numbers come out. Finally, something to talk about, right? Yesterday, it was like everybody took the day off, Super Bowl, or, oh, I'm tired, whatever. Today, we get inflation numbers come out at 3.09% for the what they call the headline inflation number. Or if you want to look it up, it's just the consumer price index. There's no word of inflation in there at all, but that's the inflation number that they're all talking about. 2.9 was what the median guess was, so inflation comes in just a touch higher than expected there. If you look at what the Fed is interested in, they're interested in something called core inflation. Takes out some of that volatility there. We expected core inflation to grow. That's okay. Inflation can go up on a month-to-month basis. So it went up 0.3%, 0.3%, right? No, we were expecting 0.3%. Goes up 0.4%. Doesn't sound like a whole lot there, but remember, we're talking about a whole lot of money, right? So 3.9% inflation rates, core inflation, year over year is what we had there. The expected was for it to just tick down a little bit to 3.7%. Now, what does that mean? What do you care, right? Obviously, your investments are changing and stuff, but let's take a look at this as if we're an investor or if we're a consumer. Right? I do this a lot with clients where I'll say, as an investor, ooh, that's kind of not really good news. As a consumer, this is where you get a little help. It's like oil prices. If you invest in oil and oil goes up, you're like, yeah, this is awesome. But then you go fill up your tank and you, oh, okay, this is not really great. So as an investor, this is temporarily bad news. We kind of get into, so I don't know if you guys care about like the inner workings of all the inflation numbers. I've touched on it in the past, but I mean, we can go into it if you like. But it's temporarily bad news. And I say temporarily because what caused the inflation number to go higher is actually very normal this time of year. It's normal to show January inflation numbers be higher because of the labor intensive type things that have gone up. Think of like, I got in a car accident. Oh my God, I got to repair my car. Okay, AI can't do that. The labor costs have gone up, inflation has gone up there. But what sucks about it is that it pushes rates higher and it slows the discussion of a Federal Reserve rate cut, meaning it delays that discussion a little bit or gives them reason to delay it. Now, as a consumer, there's some good news in the inflation numbers here, actually. I'll take a look. Here's the breakdown actually from them. This is not my chart. And so we can look at a handful of different things here. We're looking at the things that make up the inflation number or the consumer price index that actually went down, right? It's good for the consumer, or things that found their way higher, okay? So we've got used car prices down about 3.4%, stuff that would fall into the other categories like apparel, prescription drugs, things like that, all falling. Apparel down 0.7%, prescription drugs down 0.6%. All travel-related inflation numbers really strong. You guys and your freaking travel, like what are you doing? You're out, airfare, hotel costs, things like that. All much came in higher than expected, so helping to boost that number that we saw that was better than expected. One thing I'd like to point out, if you go inside here, this light blue line, this is rent, right? Generally the rent prices there. And so that has had the biggest jump month over month since 1995. So it's a good time to be a landlord there if you're thinking about that. Now, from the Federal Reserve's standpoint, what they're looking for is they're actually looking for news that inflation is coming back to them, right? That didn't happen today, right? So it's a little bit different there. They want to see it moving more towards their target zone. They're not really calling it 2% anymore. They're saying in that 2% range, we'd be happy there. And so by doing that, it allows them to continue the conversation of cutting rates. they're not going to do that. There's no reason for them to continue that conversation. So now we find ourselves going, oh, maybe we won't cut rates in May. That's still the base case right now. Everybody thinks that, but it's like, oh, maybe we won't do that there. A little bit different, right? So as an investor, it kind of sucks. You saw what happened today. As a consumer, you're like, all right, it wasn't all bad. There's ways I can take advantage of this or at least participate in saving a few bucks anyways there. So that's what really came out there. Now, market-wise, that's the stuff you're here to talk about. That's the wrong one. Let's go here. Market-wise, we have a market that, and can I just stop for a second? Can I just do this a little bit different? It is a fascinating study to see clients' emotional response to politics, geopolitical events, generally is kind of the hot button right now, what the stock market does, what you see on TV, things like that. It's a really fascinating study. It's helped me become really dead inside because I see everybody like panicking, or really greedy or really emotional and stuff. And so previous to this, we look at the stock market and I've got clients going, hey, what are we doing? Let's go faster, swing harder, let's get more growth. And it's like, really? You want to do that now? I mean, I understand. I see it. I'm right there with you. Come on, market, pull back. And now here's what's happened. And tell me if I'm wrong. Is this off base? Now the markets have a really horrible day. You got 4% loss just in the Russell 2000, right? So now we have a really tough day. And I go back to these clients. I'm like, okay, I understand your concerns. You want to get into market. And now they go, well, should we wait and see? I love that. Now it's like, what do you want? Do you want to be in or you want to be out? So the moral of the story here is from what we do every day. We go through the market. We break through each little piece there so we can understand where is there opportunity? What's discounted? If it's discounted, does that mean we want to buy it now or do we just see it as discounted and it's like front, burner type stuff there? So really, really cool. And remember, when you look at the stock market and you see it's up, oh man, 4 or 5%, whatever. Those are not your gains until you realize those gains. It doesn't matter where you hop on the train, right? As long as you're sticking around, I guess, but the gains are not yours until you realize them. So I really don't care that the market pulled back a little bit here today. I hope it goes more. The gains didn't matter. These 5 days right here were never yours to begin with, at least at this point, right? That could change there. So really, really fascinating study. Now, inside the S&P here today, every sector was down 1% or more. Strike that. Healthcare managed to squeeze out at least a loss of 0.9%. So, still there, basically. But where was all of the real weakness today? I'm going to point out some things here today because it's really, really important to see these things. Consumer discretionary products. Oh my gosh, inflation is higher. That must mean these things cost more. That means these companies are worth less. Their margins will get smaller, right? There are layers of thinking there that people are looking at. Every factor of the market had a huge down day. And I talk about the small caps today because they had the biggest move. I don't know why it's doing that. Down 4% on the day, erasing almost 3 full, really good days worth of gains. So remember we were talking about the Russell, like, okay, that's kind of the area that's at least not really waking up right now. But is there any mention of, oh, now we jump in on it? No, it's just something that you note. You look at it, okay, I see what's happening there. I'm not quite sure I understand that it should be valued at that price that we saw yesterday. So you wait. It's still great. That's still the place I want to look. That's still the thing that's the most interesting to me. But remember, when you look at markets, you're trying to determine if you want to buy it, and if so, when do you want to buy it? If I'm going to boil this down to the most simplest thing here, fundamentals tell you why you might be interested in something or not. And the technicals may tell you when you want to buy something. When we look at the stock market, remember what we talked about last week. Hey, the stock market's moving higher. Why are more stocks moving lower, and in particular as something to use as a measurement tool, below their 50-day moving average? Well, how could that be? Remember this chart here? I'll show you. We looked at this one. The blue is the stock market moving higher. Okay? Last week, you want to watch the show last week, you can kind of see what we were talking about. The blue is the stock market moving higher, but the percentage of stocks moving lower, in this case below their 50-day, was, increasing. Oh, wait a minute. That's not cool, right? More and more stocks were moving below their 50-day moving average. How can that be? How can an index keep going higher if more stocks are moving lower? Case in point, right? I did a whole thing here today. I'm not going to go through all of them because something's clearly wrong here. Invesco, go in the wrong direction. You say, well, Dustin, maybe that's just that sector there. All right, Biogen, that's going the wrong direction. What's happening there? How can these things happen? Let's go to a different sector. Newmont, it's a mining company. Oh my God, they're making new lows. What's going on there? Warner Brothers, I get it. There's a lot going on there. You know, it's a difficult world right now for them. Oh, they're moving lower. Mosaic, Crown Castle, Con Edison, FedEx, Texas Instruments, Carnival Cruise Lines, Apache, 3M, Garmin, Mondelez, Snacks. Why are all these stocks moving lower? So we have the discussion of, it doesn't mean the market can't go higher. It means that all these stocks that for whatever reason, now over half of the S&P, 258 stocks to be exact, all the stocks that are moving lower, they better start going higher or we're in for it. We've got some trouble there. If those stocks can now start to participate, okay, great, we can continue to fuel this rally. That's not happening. When you get that kind of economic news, that does not happen there. It's really, really difficult there. So be careful when you fall for this, oh, it's running away without me. They're not yours until you realize those gains, right? I love the emails come in from clients there. Hey, we talked about this a second ago. Russell 2000, right? Down 4% in one day, right? So that means now year to date down 3.04%. Every factor in the Russell 2000 lost today. That's a fancy way of saying the index lost 4%. The growth stocks inside of that index lost 4%. The value stocks inside of that index lost 4%. Really, really difficult. Tough one. Okay, also, title of the show today. When do you take your RMDs? I'm getting this question a lot, right? The stock market is telling you when to take your RMDs. Eric did a great video on this that's up actually now on our channel, where he was talking about the concept of taking RMDs. Those of you that are younger don't have to worry about this, but those of you that are getting close, we said, well, if you have to take your RMDs, whether it's an inherited account or whether it's a normal, you've reached age for yourself, somewhere between the 70 and a half and 75 with the new laws there. So the stock market tells you when to do it. It's early in the year. There's no rush. We have all year to see if the market can trade somewhere lower than all-time highs. I'll take that bet. I'm willing to wait. I don't have to take the RMD. I got plenty of time, right? So when you look at doing this, this is just the same for tax loss harvesting, all this other stuff, but we're focused on RMDs here today. This is your move as you start to have that. Okay, now, or not now, but as that works, okay, I'll do it then. Remember, there is something every advisor, every person, whoever's helping you with your money, hopefully it's us, they should be doing something called journaling. When it's time to take your RMD, journal it to the other account, usually a brokerage account in this case. Take the value of those positions and tell the IRS, that is my RMD. There you go. I satisfied what you needed me to do. They don't need to know legally that you just moved it to another account. And the value of those positions may continue to fall over the next couple of days or whatever, but they'll recover over time. We want to show the lowest possible value when we do that RMD as possible. So many of you, this is a bit of a personal finance lesson, but so many of you, tell me if I'm wrong, you say, I got to take my RMD. Oh, it's $13,000. All right, give it to me. Oh, you're missing out, right? You're just volunteering money to the government, which, by the way, has decided to spend a ton of money on the Ukraine war over there and totally dropped our U.S. Concerns, which we won't get into that. But so they're spending your money on other stuff. Let's make the most amount of money we can make for ourselves. So that's the focus for me. I wanted to just cover that because can you tell? Can you tell, by the way, that some of my discussions on a day-to-day basis come from emails that I see consistently come in? All right, let's go to stocks in the news. I'll take your questions, see what we've got here. Goodyear Tire. Overall volumes down about 2%. That's not good. They are the behemoth of this world, right? You got a tire on your car. One of those brands is probably made by Goodyear, if not made for another company on behalf of Goodyear. So anyways, they come out with earnings there. Revenues down, sales down, right? And they see that overall volumes are going to continue to decline. Not good. That causes, and not good to have that happen on such a down day. Probably wouldn't have been as bad, but nonetheless, it was. JetBlue, Carl Icahn, he almost, I believe, or no, he has just over 10% in JetBlue. I could care less. But nonetheless, that moves the stock. That's something that puts it in the news. 20% gain for Mr. Carl Icahn now that he's got that position, assuming he bought it somewhat recently. Coca-Cola, interesting one, I think, earnings-wise. It's not the biggest mover. You're not often going to find that Coca-Cola has a big move on earnings because they're so big. Their market share is so huge that all we really care about is their organic growth. If you're ever invested in Coca-Cola, you don't care if they were, maybe you care if they bought some drink or something, right? Some other brand. But all we care about is organic growth. And that's simply because they can't market anymore, right? The world knows what Coca-Cola is. And so whether they spend another $10 million on advertising or not, they know better. They know that doesn't really help their overall growth. If you're a Coke person, you're a Coke person. I'm surprised they don't really target kids more. But anyways, so for Coca-Cola, organic sales growth, first of all, they beat on sale. Everything was good there, right? But they said going forward, our organic sales growth will be higher than you expected. In other words, we won't have to really do anything different. And instead of 5.9% organic growth, we're going to be in the 6 to 7 range. That's pretty good news. Now, on a day like today, I'm not certain that, this is the day you want to say, oh, okay, looks like a little bit of a top in the market. Maybe I'll just start buying Coke. You might wait a little bit, but that's good to see, right? It's good news for them. Also, Walmart came out and announced that next week, this exact time, they will be reporting earnings. Walmart is, if you've heard me say it in the past, they are they're not the actual end of earnings, but we consider that the end of earnings because that's kind of like the last big dog to report earnings. And then from there, it goes into like Kohl's and retailers and, people that we can kind of look past if something's not really good. They're not going to move the market all that much. So they've got earnings coming up. You had a ton of earnings that came out here today. We don't need to go through all of them, I don't believe. And then tomorrow, after hours, your focus probably be on Occidental Petroleum, Albemarle now, since it's a little bit of a light day. And then throughout the day, you're going to have Global Payments, CME Group. Yeah, that's pretty much it in the world of earnings there. All right, let's see what questions you have. Happy to answer your questions. Oh, do I need to go to?
Yeah. Yes. You want the leaderboard or you want to talk about something else?
I don't know. How you doing today?
Hey, I'm doing actually a question for you. Who was it that's beat on 6 or 7 straight earnings and they had to report this morning before the bell?
Oh, they were 8 of 8.
8 of 8. Yeah.
Let's see how they did here.
You want a leaderboard while you look that up?
And then what's our leaderboard?
So yeah, we got Hannah, Andre, Lawrence, Ella, and Silk. That's your leaderboard. We got 3 past winners on that leaderboard, a star-studded leaderboard this week. So
yeah. Oh, Hannah's always there. Right?
Hannah's always there. Hannah's always there. Silky's always there. I think Lawrence actually is also a winner. So there you go.
I'm pretty sure it's just Silk.
I think it's Silky. There's an E.
No, I don't. Silk, where are you at?
There's an E.
Girl.
There's an E. If there wasn't an E, then I agree.
No, the E represents class.
Oh.
Silk is like.
I see. So that's why the Mercedes has the E-Class.
Okay. Silk is like, truck stop, adult club kind of a thing.
What?
Silk with an E that's a classy lady right there.
Yeah, but Silk yeah, this is dumb. Did they beat on earnings?
Okay, so it's Welltower, by the way.
Okay.
So yesterday, Cody was just bringing up, we were talking about Welltower has never, in the last 8 quarters, they have not been lower on earnings. And it's kind of a day to think like, ooh, man, could they do it on such a tough day? They didn't do it. Down 0.32%. Take a look at what happened, though. It gaps lower, and do you think that's a strong move for Welltower, or is it bad? Just think about it. It gaps lower, right? Who cares what happened? It starts rallying higher, and as the market was getting weaker throughout the day, Welltower got stronger. So you'd call that relative strength. Here's a stock that had every right, given what happened with interest rates today and what sector they're in, had every right to say, ooh, it's a bad day, continue to pull back. And investors looked at their earnings and said, I want to be a part of that. That discount is worth buying today of all days. So I think that's rather strong for them. It's kind of nice to see. And I got rid of the screen there. There we go. Kevin's had enough of these Goodyear tires. I agree. I got 2 tires on my car, and I thought they were quite pricey. Eloy, oh, there's Eloy. Sold half your Qs last week, the other half today. There you go. Kirk, reinvest the RMD. There you go. Well, so now you're a great candidate for something like that by just simply journaling the transition into, I'm assuming, your brokerage account there. It's all good. I love it. Kevin's like, I'm out. He's been realizing these gains over the last 3 days. Locked them in. Great. So now you have cash. And even if tomorrow just like, is a quick recovery day, do you chase it? I don't know, right? Because what do we have? We still have more stocks moving lower. We have like I said, 258 stocks in the S&P, but trading below the 50-day. They're telling you we don't want to go up just yet. And even if they did, would it matter at this point? So tricky one there. And then there's the likes of Nvidia. Like what's happening there? Some of this is crazy. Dustin Dodge says, I just learned that cashing an I bond and contributing to an education account, you get a tax break on the interest, maybe on the state level too, depending on what state you're in. So you got it. Tom says, hey, Dustin, any stats on Albemarle earnings? Thinking about selling puts after earnings tomorrow. So Albemarle will be reporting tomorrow, as mentioned a minute ago. They beat 83% of the time, 57% of the time on earnings. It's after hours, though, so you got to wait all day there. Last time they were down on earnings. So, actually, what would that be? 5 of the last 8 earnings reports, they were actually trading higher. So truthfully, now this kind of sucks, but you know what I would hope for? You'd hope for a negative response to earnings. Volatility is already high. If you could get it to just fall, right, gap below that low and wash out and hold on to yourself, don't do anything crazy until the morning washout there. I'd prefer that it actually starts by selling down towards that 100 mark and then play that game that you're trying to play. If you could ask for anything. And truthfully, it might kind of be priced in. Hold on a second. Okay. So the expected move in the options market right this moment is just over $10. Uh-oh. Skewed to the downside. So we'll see. You might get exactly what we talked about there. Maybe Cody remind me tomorrow. We'll talk about that one again. You go, oh, he's on it. Okay. All right. Let me forget anything again. I love it. Kevin's going to hold on to that cash. Thoughts on maybe the Fed raising rates again? I don't think you would see that discussion. And it's purely because it makes them look like they now have lost control, right? It's perfectly fine to say, hey, we're going to keep talking about eventually cutting rates, but we realize that the inflation number going up is sort of a one-off, right? And this is not a new trend of us having higher and higher inflation. If you really look inside the inflation numbers, if you want, just like leave a comment or something whenever most people watch this later. But if you want, we'll take the next inflation numbers and we'll actually break it down if you want, just to see. I don't know if that's really exciting, but then you can kind of see like, why would they say that? Why is the Fed's language going to change ever so slightly? Yeah. You like your bonds there, or the bond proxy, the ETF there for a 6 to 12 month outlook. I think you're probably, I can't tell you what to do, I guess, but I think you're probably early on that one. Obviously rates moved a little bit higher here today, but let that settle down, right? Let's get a little more clarity on what happens around the rate cut. Tomorrow, what we're going to talk about is why the stock market will not be going higher when the rates are cut, right? Eventually it will, but I'm saying like, all of you that think we are going to see them cut rates and that's going to just bolster the economy or the stock market higher, that's not how it works. It sounds like that's how it should work, but it's not how it works. So we'll talk about that there tomorrow. Old Dustin's been searching for cruises. Don't tell us what the ad was, then we'll know what you're looking for, man. Christopher's a handyman. He likes to do manly things. Dustin is looking to go on vacation.
Can that be a thing we do, by the way? If you get an ad, you have to tell us what the ad's about. That way we know kind of what everybody's talking about.
Okay, I like that.
Yeah.
Yeah. Now we get to learn a little bit about you guys. So now we've learned a lot about Chris. Yeah. Chris, you can come by and help work on my truck. That'd be cool. Dustin, I wish the best for you. Royal Caribbean's really expensive right now, but hope you enjoy your trip. I love it. Cody's going to get the ad for the Taylor Swift album.
I did.
He did? All right, we're going to wrap it up there. This is the part where it goes off the rails. We'll see you tomorrow. We're going to talk about that tomorrow with the Fed. Cutting rates is not going to just make the market go higher, so ease up on that thought, and we'll see you then. Thanks for watching.